Hey everyone, Tom Donnelly here, back with another deep dive into the world of laundromat ownership. And if you've been following my channel, you know I'm all about giving you the real, unfiltered truth about this business. So today we're tackling a topic that's crucial for any aspiring laundromat owner: financing. So you've seen how I've transformed a struggling laundromat into a $330,000 a year powerhouse, but that journey started with the understanding of how to finance the initial purchase. So I'm going to walk you through the nitty-gritty details, share my personal strategies, and give you the tools you need to secure the right financing for your laundromat dream. So let's get started. All right, before we talk about financing options, we need to understand the true cost of acquiring a laundromat and what needs to be done to it after you buy it. So it's not just the sticker price, it's everything else that comes with it. So let's break it down. All right, the first thing, purchase price. So this is the obvious one. Understand your market. What's a good price for the area you're buying in? Negotiate the price if you need to, and understand the valuation of the laundromat and how to do an analysis of it. Then due diligence. This is where many people drop the ball. So you need to do thorough inspections of mechanical and electrical and make sure there are no major upgrades that you're going to make or need to make when you acquire the laundromat. And the other thing you want to do is shadow and coin collect with the current seller at least 2 to 3 times before you complete the acquisition, so you can understand the ins and the outs of revenue and how the laundromat operates. All right, renovation and upgrades. So this is where you can add significant value, but it's going to require a significant amount of capital, possibly. So things to ask yourself: are you going to be replacing all old machines? Are you going to be upgrading the electrical system, redoing the flooring and lighting? These expenses can range anywhere from tens of thousands to hundreds of thousands of dollars, depending on the scope of work. Now, one thing to remember here is all of it or most of it can be financed through a lender or a machine distributor. The next thing is working capital. So you're gonna need cash to cover initial operating expenses like utilities, supplies, payroll, and marketing. Don't underestimate this. You're going to need a cushion to weather any unexpected expenses that may arise after you close on the laundromat, and they definitely will. All right, so understanding these costs will help you determine how much financing you need and what type of financing is going to be best for you. Now let's talk about my favorite financing option: seller financing. This is where the seller acts as a lender, and it can be a game changer for several reasons. So the first reason is flexibility. You can negotiate the terms that work for both you and the seller. This includes the down payment, the interest rate, and the repayment period, meaning how long you're going to pay that loan back. The second reason I love seller financing is speed. So this is going to be way faster than a traditional bank loan because there's less paperwork and fewer hoops to jump through, and you don't need to have a good credit score or any good purchase history. You're just working this out with the seller. The third reason is relationship building. So it creates a vested interest from the seller to see you succeed, since you're going to be paying them back every month, and they may be willing to provide you with guidance and support even after the purchase happens. In my first deal, we built a relationship with the seller. Then I negotiated a 10% down payment, a 5% interest rate over a 7-year loan term. This allowed me to keep my initial investment low, our monthly payments manageable, so we could pocket a good amount of cash flow each month. So learn how to negotiate. Don't be afraid to ask for seller financing. Come prepared with a solid offer and plan to demonstrate your ability to run the business. Emphasize the benefits to the seller, such as steady income stream every month and the potential tax advantages that come along with them carrying the loan and not having to pay a bunch of capital gains taxes if they just sold it for cash. Seller financing isn't always an option, but it's always worth exploring in every single deal. All right, if seller financing isn't available, you're likely going to explore traditional bank loans, and this could be a more thorough process, but it's still a viable option, especially if you have good credit and some cash to put down as a down payment. So here are the things a bank will look at before they approve you. The first thing they're gonna check is your credit score. So your credit score is absolutely crucial. Banks will wanna see a strong credit history and a proven track record of responsible financial behavior from you. They may also wanna see a business plan, so you might need a comprehensive business plan that includes detailed financial projections, a marketing strategy, and an operational plan. Don't fret here, you can use AI, something like ChatGPT, to put this together for you rather quickly and thoroughly. Collateral, so banks will typically require collateral, which could be the laundromat itself or other assets. And then building relationships. So building a good relationship with your bank will definitely increase your chances of getting approval. And the other thing you're gonna wanna do is open an account with them and make the promise that all the cash flow and revenue from your laundromat will run through this account. And remember, banks are risk averse, so they wanna see that you're a responsible borrower and that your business has a high chance of success, so come prepared. SBA loans are another excellent option, especially for a small business acquisition. They offer several advantages like lower interest rates and longer repayment terms than many banks do. So SBA loans typically have lower interest rates than a traditional bank, and their loans often have longer repayment terms, which can help you manage your cash flow and make more cash flow. But here's the thing, be prepared for the extensive documentation and a thorough review process. And an important note here is that the laundromat will need to occupy at least 50% of the commercial building it's in to get an SBA 7A loan. SBA loans can be a great option, but they require patience and attention to detail. All right, now let's talk about a powerful financing option that's often overlooked: private investors. This can be a game changer, especially if you're struggling to secure traditional financing or seller financing. First, let's discuss who are private investors. So these can be high net worth individuals or even friends and family who are looking for investment opportunities. They're often drawn to the stability and the cash flow potential of businesses like laundromats. So benefits of private investors include, again, flexibility. Private investors are often more flexible than banks in terms of the loan and the repayment schedules. The other thing is speed. So the process can be way faster than traditional bank loans, because imagine if you're working with a friend or a family, you can work this deal out in a couple of days. The other thing is the potential partnership with the private investors. So some of these investors may want to be involved in the business a little more than just giving money, and they could offer valuable expertise and connections if they already have business and entrepreneur experience. So how do you find these investors? So the best thing you can do is network by attending local business events, real estate meetups, and industry conferences. There's always a bunch of private investors here looking to lend money. The other thing you can do is explore online platforms that connect investors with business opportunities. Don't underestimate your personal network. So reach out to friends, family, and colleagues who may have savings or a 401k that they would like to invest and make that money with you. Craft your pitch and go in with a game plan. Develop a compelling business plan that highlights the potential return on the investment if they help you buy your laundromat. Showcase your knowledge and your experience in the laundromat industry, even if you're brand new. If you're watching this, you're gonna have some good knowledge. Let them know everything that you've learned, and then be transparent about the risk, but also the rewards of investing in the business. All right, structuring the deal. So consider offering equity in the business or structuring the deal as a loan with a competitive interest rate. Then you're gonna wanna clearly define the terms of the agreement, including the repayment schedule and any profit sharing agreements. Due diligence. So just like any other financing option, do your due diligence on potential investors. Ensure they're reputable and have a track record of either successful investments or just a track record of being reliable, because finding a private investor can be a powerful way to secure the capital you need to acquire a laundromat, but it's going to require careful planning, effective networking, and a compelling pitch on your end. Every deal is unique and you want to explore all available options, so here's my comprehensive financing strategy. Always prioritize seller financing first and negotiate seller financing whenever possible. So develop a robust business plan. This is your roadmap to success, no matter the type of financing. And again, you could use something like ChatGPT or another form of artificial intelligence to help you build out this business plan and find a laundromat business plan for you that's already online. Build strong lender relationships, whether it's a bank or a seller, build trust. And then understand and know your numbers. So knowing your financial projections inside and out is going to show that you're prepared. And then the other thing is, be prepared to invest some of your own capital. Show lenders that you're willing to put skin in the game if they give you, a certain amount of money for a loan to go out and buy the laundromat. Shop around, get multiple quotes, and compare terms. Financing isn't just about getting the money, it's about getting the right money. So do your due diligence, negotiate effectively, and build strong relationships. Financing a laundromat is a critical step in your journey to financial freedom. So by understanding all of your options, negotiating effectively, and building these relationships, you can secure the financing you need to get your first or next laundromat. There's no limitations here. It's not if you're going to do it, it's how and when you're going to do it. So put yourself out there and make it happen. All right, if you found this video helpful, please give it a thumbs up and subscribe for more laundromat insights. I want to reach more people and impact more people with laundromats and have more people buy laundromats so they can create cash flow and financial independence and not have to rely on one source of income. And as always, leave your questions in your comments below. Let me know what type of topic or video you'd like to see next. Thank you for watching. I'll see you in the next one.